Hello and welcome to the preview of the March issue of The Banker, which will be on hand at the Inter-American Development Bank annual meetings in Panama later this month. I'm Joy McKnight, editor of The Banker. The cover story this month is about the changing role of multilateral development banks in Latin America. And with me in the studio is Barbara Pianesi, LATAM editor, who wrote the cover story. So thanks so much for joining me, Barbara.
Thank you, Joy.
So it's very interesting. Obviously, right now, the US Treasury is racing around trying to find a list of contenders with strong credentials in climate finance who will really lead the overhaul of the World Bank following the early exit of Trump appointee David Malpass. So obviously, this is a very topical story at the moment. But what has really brought multilateral development banks into the spotlight today?
So basically, over the past few years, multilateral banks, or MDBs, have been increasingly talking about the so-called billions to trillions agenda, which means that billions in public funds can really encourage even more private investment. So let's say we're going to be able to reach the trillions of the needed investment to attain our goals in climate finance. But aside from the rhetoric, the reality is that if we look at public-private partnerships where MDBs have been involved, we don't really see a high leverage ratio. So it means that for each dollar that an MDB has provided, either as a subsidy or guarantee, they were probably at best able to unlock a maximum $1, so a one-to-one ratio of private capital. So it's not really, we are very far from the kind of trillions. So there are doubts that this kind of model, the model that we have seen so far, can be scaled. And this is why also, for example, in the past few months, Janet Yellen, as the US Treasury Secretary, has asked the World Bank to come up with a reform plan. So, yeah, there are a lot of things that kind of need to change, and that they are pushing these institutions under scrutiny.
Okay, so how do you think that MDBs really need to evolve in terms of their purpose?
So I think that there is a consensus that MDBs are really needed as enablers for this green transition, but the question is how, because there are different ways they can be involved. So one of the ways is for them to expand their balance sheet, so they can go to their shareholders, so the governments, and basically get a capital increase, or they can just go to the markets and just increase their borrowing and therefore their lending capacity. Other critics say that the capital, their lending is underutilized, so they are just urging some and proposing some reforms so that they can really expand their lending with the capital that they already have. And then there are other people that just say that, look, it's good that these institutions have a good financial firepower, but they should also they should increasingly focus on their operational capabilities. And they are already doing that, but they should provide more advisory for the private sector to be involved in projects that can have an environmental and development impact. And finally, there are other people that say that instead of involving the private sector, as is happening and has been increasingly happening, MDBs should lend directly to public, should just focus more on lending directly to governments instead of involving the private sector in these private-public partnerships that can be a bit, in some cases, controversial.
Okay, but what are some of the changes that have happened specifically in Latin America and how these institutions are operating there?
Yeah, so it is a good question. So we always say that nothing has changed, but I think there has been some change in the sector. So if you look at after the global financial crisis in Latin America, we see that certain MDBs have kind of retrenched, for example, the World Bank, but at the same time, we've seen an increasing role for the regional development banks. So I'm talking, of course, of the Inter-American Development Bank, but also CAF. So CAF, the Development Bank of Latin America, has received an important capital increase in the past few years. And this is quite telling, because CAF, as opposed to other development banks, is kind of owned by Latin American governments. And there is no, for example, US involvement. And a lot of people say that governments in Latin America see CAF as more kind of attuned to their regulatory framework, and for them it's easier to collaborate with CAF rather than other banks, especially when it takes really many months to get a project approved and disbursed. And so these are the main things happening. And on a concluding note, I think it's quite relevant to say that in some countries in Latin America, as well as in other developing countries or emerging countries, are saying, look, it is good that climate finance is important, but at the same time they are worried that the MDBs might be distracted from their most important objectives, which is promote development, like health, education. So they are afraid that the focus on climate finance might divert resources from other important objectives.
Excellent. Well, thank you so much for your insights, Barbara.
Thank you, Joy.
And thanks to our audience for watching. You can read Barbara's cover story, as well as some online-only news analysis pieces on thebanker.com.